Hi, I'm Justin Dye, Chairman and CEO of Schwazze, and we're the leading vertically integrated cannabis company headquartered in Colorado. And now we have operations as well in New Mexico. And when we say vertically integrated, from growing the plant all the way through to selling it at retail and having our own retail stores. So glad to be here with you today, and really proud of what our company is doing and all of our team members, and look forward to talking about the company.
Great. Justin, lovely to have you back on, and appreciate you making the time for us, because I know things have been busy. Lots of acquisitions since we last spoke. You've listed on the NEO as well, and obviously the thing I want to talk to you about is the kind of Q1 results. Some stellar numbers there after what turned out to be a sort of tricky 2021. So what are you most proud of?
I'm really proud of our ability to get our deals done, and we're now 33 stores in 2 states. We now have really good growing capabilities. We have 2 manufacturing campuses in Denver and Albuquerque. I think the ability to continue to grow and outpace our markets, I'm really proud of that. So if you look at it, we've consistently outgrown Colorado. Once again, in the first quarter, we outgrew the market by 10%. And we'll see better. I think we'll see a better environment the latter part of this year. But really proud of the team and commitment to excellence around retail and launching new products. We launched a vape cartridge under our Purple Bees brand this quarter, and it's now in New Mexico as well. It's doing quite well, and the team's done a nice job. So we're off and running, and we look forward to having a great 2022.
Yeah, it's just to remind people, it's kind of like the Albertson band got back together and applying this to the cannabis space. The attention to detail around where you're making money, how you're making money, and and targeting, I think, something we've been through before. And I'll encourage people to go and look at the kind of first interview that we did, which we laid that out, because that's the bit that impressed me the most. But I referenced it. Last year was tricky. It was tricky in a kind of strange way. There was all of the kind of COVID money, government money, which kind of came into the space, and you will have benefited. The industry will have benefited from that. That's gone away there now, and the markets have come off. It's a high inflation environment. It's a risk-off environment, and people are hoarding cash. So how do you navigate yourself through those sort of choppy waters?
Yeah, it really starts with good financial management and attention to detail. So making sure that we're making the right investments in the business, which we are through new stores, real estate acquisitions, new products, et cetera. And we really want this business to be growing with profitability. So the business itself is generating free cash flow before we invest it in new opportunities that will create returns for us. So that's really the focus, is run really good retail stores, continue to drive customer count and growing our basket at retail, launching some new products with our own brands, which we think we're uniquely in a unique position to be able to do that, because brands are made at retail. So the ability for us to work with good vendor partners, put their products on our shelves, and really drive the consumer towards those brands is a very powerful thing. So we're retail forward, as you know, and we think retail, it all starts with retail and providing a great experience for your customers and patients, and then working that backwards. So you've got really efficient supply chains in the different areas, manufacturing and cultivation, distribution, and then having a really great house of brands that stand for high quality. So when you look at that, and you look at our ability to generate cash flow from operations this year, we're excited about that. But we've also got we're aggressively growing. So being able to do that takes finesse, takes, I think, a good team, and we're certainly doing that.
Well, talk to me about the strategy, because this is the thing that intrigues me. When markets are tough, you've got to have the right strategy. You've got to be able to deliver that strategy. You've got to have the people to deliver that strategy, and the economics need to stack up, right? So you start off in Colorado. You're now in New Mexico. I know it's not apples for apples precisely in terms of, can you compare those two yet, but you'll get there. But Colorado, it was a kind of, again, sort of tricky. You talk about some of the headwinds that you came up against there and that you've been dealing with. Maybe start with that, and then I'll kind of get to the heart of the question I actually want you to answer.
I think when you look at Colorado, we've had a number of growers get new licenses in Colorado, and this happens at every state. Matt, it goes up, and prices go up and they go down based on supply and demand. So, we've seen a number of cultivators come online. Now we've seen pricing deflation in terms of wholesale flower in the market. We've also seen that translate into distillate pricing, which we're one of the largest distillate manufacturers in the state. So you see pricing pressure there. But what I think the team's done a nice job of doing is continue to work with customers to drive unit growth and still grow during that environment. So I think the ability to do that, I think, is really important. And I think we're going to see more and more opportunities for us to grow market share there. And I think you're going to see weaker competitors falling out. We're starting to see some of that. And then New Mexico is a very exciting place for us in terms of it's probably, it's about a third the size of Colorado in terms of population. And, we have sophisticated consumers both in Colorado and in New Mexico. And you're seeing it grow tremendously in New Mexico. And adult use in New Mexico kicked off April the 1st, which I know you're aware of, but some of the folks out there may not know that, which allows us to sell to the adult use customer as well as medical patients. And we've seen that grow substantially.
Interesting. Right. So here's what I want to get to, because it's about winning. And you gotta lay your stall out. You gotta get the right pieces on the chessboard, right? So if I look at market share in Colorado, you've chosen, and I guess New Mexico as well, you've chosen an acquisitive strategy there to get the footprint, the market share. But there's a kind of cost to that versus organic. So if you could explain to, again, viewers, listeners to this program, why that makes sense, spending the money now to kind of set yourself up for potential future success.
Yeah, great question. So if you look at it, Colorado is a $2.2 billion market. We've said that we're going to be exiting quarter four at 220 to 260. So you can kind of do the math there. Now, some of that, you have a little bit of New Mexico in that number, but you kind of get a relative order of where we're at in terms of market share, et cetera, in Colorado. But when you look at that, we think there's great opportunities to buy businesses. So when you can be buying these businesses for, a multiple of revenue or a multiple of EBITDA that's less than where you're trading, and you can pour synergies on top of that to create even more EBITDA and cash flow, that makes a lot of sense to do that. And then on the organic side, where you have new licenses and new geographies, that's a cost-effective way too. So we're constantly looking at what's the best way to get to serve customers. So that's hopefully that makes sense.
Yeah, it does. But again, I kind of was thinking to kind of lay this out for people to understand, which is you mentioned the revenue numbers. Revenue numbers are, obviously impressive. Q4 2022, you're talking a run rate range of around 220 to 260 million. From, I think when we first started talking, 7. Was that about right?
Yeah.
Right. So the growth is there, but you've got to kind of plow it in. You've got to make investments now. For the future success. But that do you think that affects the way people view you today, or how would you say that people should look at your company, the way you're setting it up? I'm looking back to your success at Albertsons and the way that grew. Are there any parallels?
There absolutely are. I think investors ought to be investing behind management teams that are tested and they've been through the battle. So it reminds me a lot of 2008 that we went through. We had a major reset in '08 and entered recessionary territory. And obviously, we all know that was a rough period of time. But, I think watching your capital, I think betting on the right team that's going to be good stewards of capital, that have been there, done it. They're going to watch their cost as well as try to grow in choppy waters. I think that those are the types of teams you want to invest in. And you look at us on a relative valuation basis, we're very cheap. We're very cheap. And I think you're going to see our growth and our profitability. I think you're going to continue to see that going forward, and we'll get credit. So I think we're one of those mispriced opportunities in the marketplace. And I think it's important for investors to bet on teams that have been there and done it before. And I certainly think we're one of those.
Okay. So creating cash flow is really, really important. Margins are really, really important. Efficiency is really, really important. And we talked earlier on about potentially a jurisdictional risk component to this. Obviously, Colorado, where we started off, it was kind of choppy. It was a little bit up and down. You've navigated those, as you say. You're now in New Mexico. It may come up against its own headwinds. And then you look sort of federally, you've got a government which is not yet really signal to the market that don't worry, it's gonna be okay. Safe banking, etc. Are you, with your M&A, are you just to stick with those two states for now, or are you eyeing up other opportunities to kind of reduce this jurisdictional risk, as it were, at state level?
No, I mean, great question. We're focused on being a really superior regional operator. So today it's Colorado, New Mexico. When we look at other states, of course, our principal focus today is Colorado and New Mexico. And, when you look at profitability, if you look at competitiveness, et cetera, I think it's correlated to density and market share. And we're going to continue to focus on that. And as I said, I think we're a really well-run company. I think we're going to continue to come out with innovative retail opportunities as well as new products. And it's all about investing in it and continuing to invest in the cycle, invest in your people, continue to listen to the customer, and be good stewards of capital and how you invest. And we're going to continue to do that. And I think we're going to be one of the winners. I think we're one of the winners now. I think we'll be one of the winners as we emerge once we get some continue to get federal help from a regulatory standpoint, which I think is around the corner. I can't predict the time frame, but I think it's no longer a party issue. You have Republicans and Democrats both supporting cannabis, and a majority of adult Americans support cannabis legalization. So I think we've got things on our side. I think things will continue to improve, and I think you'll see cannabis stocks trade up substantially in the future. Okay,
I don't dig too much into the politics of it. It's kind of cross-party, which is great, or starting to be. But no, they're not hindering you, but they're not helping yet by coming out and stating that it's okay. So states are slightly nervous, but no one's being held back in that way. By federally, the states are being allowed to, regulate and monitor that themselves, albeit with whatever degree of caution they're allocating to that. But what I do want to talk about is I want to come back to the numbers side of things, right? With your Albertsons retail background, I just want to get into what should we be looking, what should retail high net worth family offices be looking at when we're looking into this thing? Is there any one big moment where you go, well, that's the thing which is going to dramatically change our fortunes and that of whatever cannabis companies are around, or is it lots of little things like new product ranges that come in, new stores opening up, and it's the sum of the parts? I mean, how does retail work?
Retail works the following. It's doing a lot of things well every day. So why is retail important? It's important to have efficient retail, so dollar per square foot, that you're generating revenues and profits, and you've got great service there. That's important, but you've got to establish, in our opinion, our philosophy is establish a really strong retail network. And then you've got great access to the customer. you know what the customer wants. You can start bringing in new products from your partners and launching your own products. And that's where brands are made, Matt. I mean, that is where on the shelf is where brands are made. And we're in the first inning of brand development in the cannabis industry. So your initial question was it's a series of things. So retail is important, that you have density, market share, and you run really good retail stores. You run a really efficient supply chain in terms of manufacturing, distribution to those stores, and you got to work at it every single day. And, you know, we get some help from the federal government that will, hopefully we get safe banking where our borrowing costs get lower. And, at some point in time, 280E taxes that we have to pay, we basically we pay taxes on the gross profit line instead of the income line. So you don't get to deduct your SG&A expenses. But once we get some of these key moves, our cash flow grows dramatically. And, it probably doubles. So the fact that we're still generating, we will generate free cash flow this year. The fact we're doing that with 280E without a lot of this federal regulation is, we're one of these really great opportunities to invest in now, and you should see good returns in the future.
Right. So you said you're a good custodian of capital. You did a fundraise end of last year, beginning of December, $95 million. Has all of that been allocated? Have you utilized that? And more importantly, do you think that you did use that money wisely? Given it was, I think you did it as a kind of convertible note structure. Certainly part of it.
Yeah, I think no. I mean, the answer is we still have approximately $50 million of cash on the balance sheet. So we have not used all of that. And cash is king in this business. It's hard to raise capital. It's getting easier up till about a month ago. But
how does that make Justin? How does that make you feel? Right, you're sitting here, market cap 70 million, got 50 million cash in the bank, and you're throwing off revenue like with margins like you're doing at the moment. There's a disconnect somewhere here, and whether that's with retail investors or institutional. But do you think that people are just more broadly not understanding what's going on in the market, or do you think in your case that there's a kind of eureka moment that is going to be required to kind of get people over the line? Because these kind of numbers are, well, divergent, let's say.
I think what it is, we've got good retail investors. They've been in this investment or have been in the sector for a time, for a while, and they've not seen any real federal movement. So I think you're getting some people that are frustrated with that. You have a wall of institutional capital that's not come into the sector because they can't, because it's still a Schedule 1 listed drug. So they're, the Fidelities of the world and large mutual funds, they can't come into this sector. And once we get safe banking and descheduling, they will be able to do that. And then all of a sudden, you're saying, wait a second, Schwazze is trading at 4.5 times EBITDA. You have alcohol beverage companies and CPG, consumer packaged goods companies, that are trading at 20 times EBITDA. By the way, Schwazze is generating 30-35% EBITDA margins. These other companies are generating 20. And okay, let me understand the growth rate. This sector is about a $25 billion sector today. It's growing to $100 billion in the United States in the next few years. So let me get this straight. You've got massive growth. You've got massive profitability. You've got equity that is mispriced. They're trading at 4 or 5 times EBITDA. Some of the larger multi-state operators are trading at 7 to 8 times. And you compare that to other sectors that are trading at 15 to 20 times. It's pretty simple math. It's really simple math. And at some point in time, if we continue to do what we're going to do, we'll be trading at 20 times EBITDA. So, 4x of probably where we are today. And that doesn't account all the EBITDA growth that we're going to have over time as we continue to grow the business. So that's why I believe in our story. I believe in what we're doing. We will have a day with significant price movement upwards for the stock price. I really believe that.
So, okay, what I'm hearing is you will carry on doing the business of running the business, looking at, capital allocation, but also product line, revenue per square foot, with these new product lines and margins improving. But the thing that's going to really move the dial is federally, whenever the government, in whatever shape or form, comes out and gives clarity to the states and to the institutions that they can move forward, that they will not be punished or punitively or otherwise. So there's a few things that I need to believe. The bit that you're in control of, I can get that. But the big uptick, the big change seems to be still political at this stage. So what type of investor do I need to be coming into a stock like yours? What do you think I need to believe in?
Well, I think there's three catalysts. So I think one is what we control, which is continue to take market share, continue to be a leader in cannabis, being a professionally run business that's driving sales growth, driving margins and profitability. So that's what you control. And we've done a good job of that. And we're going to continue to work hard at that. Then you have safe banking, which is the big catalyst that I think will free up a lot of capital coming into the sector. And I think you're going to get a re-rate in the multiples, meaning multiples are going to jump in terms of how companies are valued. And then the last catalyst is descheduling. And with descheduling or some capital markets provision in there, you're going to be able to be listed on the NASDAQ, New York Stock Exchange. So you've got more eyeballs, you've got more people that are in tune with your story. Today we trade in the NEO, which is a first-class exchange in Canada. We trade OTC, and that's great. But NASDAQ and New York Stock Exchange is where we want to, we certainly want to co-list there down the road. And I think, you get those catalysts going, you're going to see multiples and a massive increase in valuation for these cannabis companies.
Okay. So I'm hearing more of the same, head down, get on with what you do best. And the strategy doesn't change or waver as far as you're concerned. With $50 million in the bank, have we got more acquisitions coming anytime soon?
We're working on acquisitions. We want to continue to add retail locations so we can cover more of the customer. In Colorado, we've got opportunities in New Mexico as well. You're going to see us work really hard on new store growth in New Mexico, and those will be more organic. Doesn't mean that we won't do an acquisition in New Mexico, but I think you're going to see us opening new stores in New Mexico and serving a number of new cities down there. So we're excited about that. And we're going to continue to work on the things that we need to do. You'll see us launching some new brands as we develop our house of brands in consumer categories. Today, we've got Purple Bees vape cartridges. We got some exciting things coming out around that brand, and that brand stands for highest quality at a good value. And we're going to continue to work on that. So, more to come. We're excited about what we're doing. There's going to be acquisitions. There's going to be organic growth as well.